Good evening, guys. Hello, hello. Let me turn on Bastter.com. Just a second. We are live Monday, 7 p.m. sharp on the spot. Hello, hello, hello. Let's see if everything is okay. I believe so. Let me try here on my cell phone to check. For those now, hi, hello Alucinos, hello Axelrod. Can you please confirm audio and video? Because I need to change something here on my cell phone. Just a second, but looks like everything's okay. I need to change something here on my cell phone. Just a second, but looks like everything's okay. And guys, I have a question for you. I have a fan right here next to me, and for me, it's very loud. But I tested here, and the noise of the fan is not supposed to be there for you guys. Can you listen? Can you hear the noise of the fan or not? I'd like to check that too. Because for me here on the software that I make the broadcast, it's noiseless, you know, so it's a good thing. Okay, thank you very much, Alcinos. It's a good thing to have I'm not sure how to say this in English, but the microphone, it's pointed to my mouth, right, guys? So, and the fan is a little bit far away. Not far away, but I mean like 1.5 meters from myself. So, guys, you know that in the past month I've been trying to have chats, interviews with subscribers. Okay, I wasn't able to do that today. Since my communication with the subscriber, it's from email. There are some subscribers who doesn't have, like, you know, doesn't look the email very often, so sometimes I can't bring them here. But I try to next Monday we have this chat so we can have different types of chat. So what did I decide to do today? Okay, it's been 2 days. I mean, on the past 2 days, there is a friend of mine who is an investor, but he has like a complete different philosophy of investment, different from here from the Bastter.com. Okay, and so we started chatting, and the conversation got bigger and bigger because he makes a lot of crazy things on my perspective about investments. Okay, and today something very I'm not gonna say funny, but curious happened when because he's the kind of guy, the kind of investor that wants to extract money from the market, wants to make money in the market. And this is not the investment philosophy that I have. It's not the same thing that we have here in Bastter.com, which is about the same thing that I do as an investor. So I would like to talk a little bit about this today. Okay, so today is Monday, 5 p.m. Today is the September 27th, right? Like I said, I would like to discuss a little bit equity and money. What are the differences? Okay, and But before that, let me show you, like I always like to do. Yes, a little bit. I'm gonna be talking a little bit about the things that he do. Okay, and he showed me some results of his investments, and of course only the profits, never the losses. But anyway, we are gonna be talking a little bit about this. But guys, before that, let me show you what is happening. This is weird. Anyway, just a second. Guys, I'm sorry, I forgot to introduce myself, okay? My name is Marcelo. If you're the first time here, I'm speaking English because I'm the consultant of the area, but I follow we are here to improve our English. So most of our chats, they are in English, okay? So let me come back here. And like I always like to do, I like to show you the area Anjos of Bastter. It's our donations projects, okay? So if you have any interest on making any donations, we have this kind of projects here in Bastter.com, okay? So you can help this girl study to get into the ITA University. You can help dogs and cats from the street to get medical attention, okay? And kids to go to school. We have many types of sportsmen as well, okay? Athletes. We have this kid that we are trying to get the Portuguese citizenship so he can play in Portugal, okay? And also a judo athlete. And this week we are gonna be introducing a new product that it's jiu-jitsu athlete as well, okay? So if you guys want to check it out, you can come here in Anjos of Bastter. So guys, let me get back here a little bit. Look at the motorcycle. What are you talking about? Which motorcycle? Axelrod, I didn't get the joke. Sorry. Anyway, if you care to explain it to me. So guys, let me get back here to my board. So this is what I wanted to discuss with you guys, okay? Equity versus money. So because there was something that I said to him, and he was like in shock, you know? And this is a guy who he has like the same formation as me, okay? We went to the same university. He is a middle class guy. He came from a middle class family, but he already has a good financial condition, okay? So since he already has a high level of equity, he has a total different investing philosophy, okay? So what I like to say about equity versus money, okay? Let me put myself a little bit smaller here. I think that's okay. All right. So guys, what do I like to talk about money and equity? For example, money. It is something that you're gonna earn at your job, okay? Excuse me. You are going to earn at your job. It's the active income, okay? So just a second. So money, it's to earn at your job, okay? You can put make money, but I think earn here is okay. Like you work and you're gonna get paid for the work that you're doing, okay? And there are many types of work. I'm not gonna discuss that, okay? But anyway, money, to earn at your job, active income, okay, guys? And equity, what is that? To accumulate in your investments, okay? So this is the perspective that I have, Okay, so for example, if I'm going to make an investment at the stock market, my goal is not to make money, it's not to earn money, because I'm not looking at my investment as a work. Okay, I'm looking at my investments for something that I'm not gonna make money. I'm going to accumulate equity. So what am I supposed to do? I have to make money somewhere else, okay, and that's why I have a job, I have a work, okay, that's where I earn money, and I need to save money so I can put money in the stock market, in my investments, okay. I'm gonna be narrowing here the investments on the stock market because, in general speaking, that's what Bastter.com is about. So, and to be easier our communication here, okay. Why am I making this introduction? Because if I work, I have a job, I make money, but I spend all this money, it's impossible to make an investment. Okay? I gotta save some of it. I'm not gonna, and the more you save, the better for your future, right, guys? So the savings rate is the most important thing if you're talking in building wealth, in accumulating equity on the long run, right? Making investments. So why am I saying that? Because I have to make money someplace, and it's in my job, okay? And I have to save some of this money. And I'm gonna make an investment with this money, okay? But when I make this investment, I'm not gonna look right now as money. I'm gonna look as an equity that I'm building, okay? That I'm accumulating. So what do I need to do? My goal is to have the more and more stocks, the more and more shares, okay? So for example, if let me write here, it can become a little bit easier. For example, let's say that I'm gonna put 5,000 reais in 500 shares of VEG 3. Okay, that's an example. Okay, guys. Let's say that 5,000 reais, I just bought 500 shares. Okay, 500 shares of VEG 3. Right now, guys, I'm gonna look at it. I'm gonna say that I have 500 shares. I'm not gonna say that I have 5,000. Okay, because now my equity is 500 shares. And I know that these shares in the future will tend to get higher. You tend to get a higher value than the one that I'm buying today. Okay, in the future, it's more likely that it's going to be higher than 5,000 reais. Okay, but of course, that can never happen. And this is not going to happen like this 5,000 reais is not going to become. It's not gonna increase, get higher, like in a linear scale, right, guys? It's not gonna be like that. It's gonna be oscillating through time because it's a variable income, okay? So what do I need to understand here? That now, okay, I have 500 shares of VEG, okay? This is the right way to say. I'm not gonna see I have 5,000 reais in VEG. Okay? For me, this is the right way to look at it. Okay? And this is the wrong way to look at it. Okay, guys? Wrong way. So what do I need to do? I need to, because if I continue, if this company or any other company pays any dividends, I gotta make a reinvestments. Because if this month I'm gonna have 500 shares, next month I'm gonna have 600. Next month I'm gonna have 700. Next month I'm gonna have 800 shares. So I am accumulating equity. Okay, of course, this equity only is gonna give me any financial return in the future if those assets have value, if those shares become more valuable than today. So I need to make good investments. I need to make investments in valuable assets, right, guys? So, but if I keep looking at it as money, if I look at it that I have 5,000 reais in VEG, what's gonna happen when these 5,000 reais become 4,000 or 3,000? I'm gonna shake, right, guys? The human being wasn't made to lose money. If you see money, if you see just money, you're gonna lose it. Okay? There is a sentence very that I like very much. That if you stop looking at money, you're gonna the money is gonna get out of your eyes and go to your pocket. Okay? If you stop seeing money, the money is gonna go to your pocket. Okay, this is a very nice sentence that I'm not sure if I make the right translation here, but it's something very interesting. You gotta stop seeing money. You gotta understand that investment it's for you to make to accumulate equity. Okay, so let's see if you guys understood me so far. Okay. So Axelrod didn't mention anything else about the motorcycle joke. Okay. Oh, okay. Now I understand. It's because Bastter likes to talk about the motorcycles that pass next to his house when he's making the chats, right? Okay. I understand now. I understand. I understood the joke. Yes, actually, I don't have any motorcycles here nearby. If a motorcycle passes around here on my on the next road here next to my house, we probably won't be hearing because the microphone will not get this noise. Okay. All right. So let's keep going then. So guys, going back a little bit to the chat that I was having with this friend, when I mentioned this phrase that I said, look, I'm not making investments to make money. I'm making investments to accumulate equity. He was completely shocked. And he said, like, I rest my case, okay? I got nothing else to say because what are you doing if you're not on the stock market to make money? So it's just a mentality, okay? It's a mentality. Right now, I do believe, in general speaking, if there is any place that you are trying to make money, you're gonna have some stress, okay? So that's what I said to him. Look, the places that I'm gonna make money, it's at my job, at the business that I have, okay? I have a job per se, né? I am a public employee, but I have also another business myself that I am the owner. So it is stressful. It doesn't matter if you love the job that you make, you're gonna have some stress, especially if you're not having the financial return that you think you're supposed to, or if your business is not going well. So this is the kind of thing that I have to put my energy on. This is the place that I'm trying to make money. If I'm opening a business, of course I'm looking for profits, right, guys? So it is something stressful. It is something that I have to put my energy on. So this is something that I do at my work, at my job, at the business that I am in. It's not something that I want to do at the investments. Because if I'm trying to make money from my investments, it is something very stressful because it's impossible to have profits every month. Okay? You're going to have some losses, even if on the long run, like on the end of the month or in the end of the year, you are in a positive income, you're not going to have just profits. You're going to have some losses as well. If you're saying you don't have, I don't believe you. But I've done that for many years in the stock market before I met Bastter.com. Okay, so I know the feeling of losses in the investments, and I don't want it anymore. Okay, I don't want this kind of feeling anymore because this kind of stress I have on the other I already have on the other parts of my life. Okay, so you have stress at your house, you have responsibilities at your son, at your kid, with my wife, with my family, and with my job, the main business that I run. So this is the place where I need to put my energy. In the investments, it's something that I look for peace of mind. Okay, guys. So it's something that I'm very conservative about it. Okay, I am in the stock market, but on the stock market, the philosophy plan, investment plan that I have, it's very conservative. So, but I know that I'm not gonna have like financial return on the short run. I know this, but it's something that I have that makes a lot of sense to me. And then when I try to introduce this idea for him, he was in shock. He didn't understood very much. But while I was explaining, he was accepting a little bit more this idea, and he gave his perspective that his thoughts it's completely different. He is over there to make money, to earn money from the market, and then I just said, man, you are presenting your profits right now here. You've been doing this. It doesn't have much time, so let's see if your method of investment it's gonna last on the next 5 years, on the next 10 years, okay? Because you are having profits now, but we know that on the stock market, especially if you put more and more money, you can crash in one day, right, guys? So it's very important to have a very strong risk control. Anyway, I wanted to bring a little bit this idea for you guys because I was very shocked when I introduced this idea to him. I was very surprised when he didn't understand this kind of mentality that I said, that I'm not on the stock market to make money. I'm here to accumulate equity. So my goal is to have more shares, and that I know that it's not that I know, but the probability that on the long run my equity is gonna get higher, higher, and higher because I'm investing in good assets is very big. Is very big because the story told us that on the 600 years of the stock market, that's what the good companies has done over the years. So this is the kind of thing that I'm putting the chances in my favor, right, guys? Because I don't know the future. I don't know which companies I'm gonna have the most valuable return on the future. I don't know this, but what I do know that it's more likely that the companies that has been doing this for the past 30 years give me a higher return than the companies that has presented losses on the last 10 years. So this is and to me it's very simple. But anyway, if you already have some experience on the stock market, you already had some positive results, it's difficult to break this pattern. It's difficult to break this mentality. So it was an interesting conversation. Still now, he's texting me about any other things. We are discussing some companies. It's healthy, this kind of discussion, but because it's two different kinds of investment perspectives. But I'm pretty sure, pretty confident on this investment method that I have. I don't have any doubts about it. That's why usually I have answers for each questionable things that make about my method of investments, because I know exactly what I'm doing, and I know that it's not a perfect investment method, right, guys? But I know the holes of the method, but I accept those holes, right? Because I don't put any emotion, I don't put any feeling on it, so I accept them, and I know that if I do this, if I do that, I could have more in return. I could have, but there is a price for it that I don't want to pay today, because you gotta follow the market a little bit more, you gotta study a little bit more, you gotta spend more time on it, and I don't want to do it. I want to spend more time working, because I think it's more probable that I'm gonna make money at my work than on the stock market. So I think this is a key thing. It's a key point if you want to be a successful investor on the stock market, especially if you are a beginner, if you are beginning to invest right now, right, guys? And the last thing, to make a closure here, a disclosure. I lost a little bit the line of thinking, but I wanted to end. In the meantime, let me see if there is any questions. Luciano is saying there's a good quote, forgot the author, about this, something that time in the market beats time in the market. Yes, that's a nice quote, right? It means that your experience, how much time you are, your experience as an investor is more important than trying to aim on the right time to make an investment, right? So it's a very nice quote. Time in the market beats time in the market. Yeah, it's very nice. So, guys, what I wanted to present to you a little bit was this. Okay, let me go back here a little bit. I think okay, to make a disclosure, it has everything to do with it. Just making a recap here a little bit. I made a definition of money that it's something that you're gonna earn at your job, not in the stock market. Okay, and equity, it's something that you're gonna accumulate in your investments. So what is the goal on the end of the day? It's to buy more shares. Okay, to buy more shares, you need money. Where you're gonna get this money? At your work, from your job. Okay, but you're only gonna have return if you're gonna buy good assets, of course. Okay, so I gave an example that 5,000, you're gonna buy 500 shares of VEG. Okay, and you're gonna look at the perspective that you have 500 shares. You're not gonna have like 5,000 in VEG. Okay, because if you look at it, probably you're gonna lose it. Okay, and to close this, it's something that I lost the line of thinking again. It came back to me, and I lost it again. To make the disclosure, I think it was something about the dividends. Anyway, what sometimes I don't understand about this kind of people that try to extract money from the market, it's because they are always talking about dividends, and they know the dividends is discounted from the stock price, and from that, for me, it doesn't make any sense why you have this emotion of receiving dividends. What I'm trying to say is this: if you get very excited when you receive dividends, you should be very sad when the stock prices crashes because the dividend is getting paid, right, guys? If you are getting very excited because you're receiving R$1 of dividends, why you're not complaining when the stock price falls R$1 when after the X date of the dividends, right, guys? So for me, it doesn't make much sense. People say they know that the dividends it's discounted for. Okay, I remember what I was saying. It was something about dividends. To close here our thoughts, guys. I always say that in my vision, okay, this is my opinion. The first, how can I put this? The first step that you are becoming a more experienced investor, it's when you ignore the stock prices. it's when you make random purchases. Okay, this is the step one. If you ignore a price, if you understand how the price is not gonna have any impact on your equity on the long run, I do believe it's the first step that you are becoming a more evolved investor. And the second step, it's when you ignore the dividends. Okay, because I do believe it's different stages. Okay, of your journey as an investor. You ignore the stock price, which is something very, very difficult to do, especially if you're not if you are always trying to extract money, if you are always trying to have short run results, if you have the illusion that your equity is gonna increase like in a linear scale, okay, it's something very difficult to do. And the second one, it's to ignore the dividends, which I believe it's easier. It's not very easy to do as to forget about the stock price, but it's I think it's easier. Okay, if you do understand how the company can generate value for the stockholders, okay, for the shareholders. In general speaking, if the company is paying dividends, the company is not making reinvestments that could give you a higher return in the end. Okay, so I mean, for me, it really doesn't make any difference. All I want is the company to have value, to be creating value to the stockholder, or to the shareholders. It doesn't matter if the company is distributing dividends or it's making reinvestments, because I do believe the company has faces. Okay, and if you build a very nice portfolio of investments, you have a good diversification, you're gonna have those kinds of companies. Okay, but to finish our conversation here, I have these two important steps as investor. One is to ignore the stock prices, and the second one is to ignore the dividends. But okay, let's see if we have any questions here. Axelrod is asking, how did you end the conversation with your friend? The conversation never ends, I believe, because he's sending, as we speak here, he's sending me messages. Because it's funny. Usually it happens with many other friends, but when your friends have like a very different perspective from investments, they try to convince you, right? They want to show you step by step, do a lot of math. There is a lot of math involved to show you that his method is better than yours. And so the conversation never ends, right, guys? Because, like I said, when I introduced this idea of I am in the stock market to accumulate equity, he said, I rest my case. But he continued to talk about other things. He started to discuss companies. So I'm not sure if the conversation is gonna end eventually someday, but it continues. He told me about some companies to look at it, to see if, in my perspective, it is a good company for the long run. I did that. I'm gonna give him the answer anyway. This is a healthy conversation, no problems on it, because I don't have this. Not just because I'm not gonna agree with him. And for me, it doesn't seem that I am a close-minded, because I know there are some people that want to make money in the stock market. Okay, but this is not something that I want to do, and I don't think it's adequate for the random person. I should say the amateur in the stock market. Alucindos is saying money from work, equities like active and passive income, right? It's a little bit like this, but for example, if to build wealth, to build a good a big equity on the stock market, the that it's enough to give you a passive income, it's something that takes time, okay? So you shouldn't be focused on the passive income right now, okay? Because this is the result, okay? You should focus on the process. What is the process? To accumulate equity. Forget about the passive income. If you invest in good assets, the passive income will happen eventually on the long run, okay? The passive income is the result, okay? Of course that in the end, the passive income should exist, but not right now, because right now it's not going to exist. Because even if it does exist, you gotta make reinvestments, okay? So I like to narrow it down just to accumulate equity, and that's it. Because each year, in the beginning, the dividends, they are very, very low, guys. Very, very small. Because you are in the beginning of the journey. But as time goes by, each year, your equity are increasing. Okay, the number of shares is increasing. Since you have the oscillations of the stock market, maybe your equity in value could be decreasing, yes, but the passive income will be increasing as well if you have good assets, okay? So just focus on the process, not on the result. It takes time to understand and give up the idea of dividends as money in the pocket. Yes, it does take time. Baiano Escocese is saying first time here. Great lecture, by the way. Thank you very much. The book is on the table. What do you think of investing global? ETF? No, I don't like ETFs, okay? I don't like ETFs. For me, it doesn't make much sense, okay? ETF makes sense. For example, okay, I don't want to study. I don't want to study anything about the stock market. I'm gonna invest in ETF. Okay. If you don't have any investments in stocks, it's better to have investments in ETF than none. Okay? Okay, so 0 stock investments and ETF. Okay, ETF is better. But this is something so important that I think you should spend a little of your time studying the stock market, studying the companies, okay? The stock picking, to do the stock picking. And today, it's easy to have the information. In Bastter.com here, you have all the information you need in Brazil for the B3 stock market and abroad, right, on the US. So it's little time that you need. Of course, in the beginning, you're gonna spend more time studying, but when you build your portfolio and you have the Bastter system, it's automatic, right, guys? You're not gonna waste any time with it. So for me, ETF is not good because you're gonna have so many bad companies over there that it's not gonna give any return. So what's the point, right? Okay, guys, thank you very much for your participation and collaboration as well. I hope you it could be a little bit helpful. The topic, the conversation that we had here today, and let's see if next Monday I'm gonna have a chat with any subscribers. Okay, thank you very much. Alucidos is saying I think it will be hard to find someone that invests just in ETF without following the market. Yes, there is a very negative point about investing on the ETF, and Bastter was the one who came up with this idea. Is that if you invest in ETF, you're not gonna develop the mentality of a shareholder, right? So I think this is very dangerous to invest on the variable income, because it will be more difficult to look at your shares of the ETF. They are not shares, they are quotes. The quotes of the ETF as equity if you don't understand the concept of being a shareholder, right? So you're not gonna understand that there is a company behind the stocks. So I don't think this is something that works. Okay, that's why I don't like it either.